Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's October 2nd. I'm Frank Curzio, it's the Wall Street Podcast, so I break down the headlines and tell you what's really moving these markets. So today, have Dio Creech here. Talk about stocks, debate, politics, China. Man, a lot going on right now, considering that it's in the middle of earnings season, which is coming up in a couple weeks. But Daniel, how's it going? I know you spent some time with your family this week.
It's good, yeah. Got some family in town. My parents are down here staying on the beach. They dodged it was crazy. I mean, man, prayers to everybody in the path of the storm, not only from Florida, but all the way up the Midwest. There's a few routes, you can take different routes to get to different places. And I said, hey, you guys go east and then come straight down. Well, thank goodness they did that, because you literally can't get here from a couple of the other routes. So that storm has just wreaked havoc. But yeah, they're enjoying the beach. And so I've worked from home. Everybody's rolling their eyes on that. But it's good to you're on the phone anyway. I don't even talk to Frank when I come in the office. So how goes it with the capital raise? Everybody better be still coming in and talking to you.
Yeah, it's just, it is everyone is coming in for our capital raise. We're raising $5 million for our company, seeing lots of growth. I spoke about this on past podcasts, and it's been good. So, if you want details, frankcurzioresearch.com. We're paying a 10% dividend with the option to convert it back into our token, which is an equity stake in our company, which trades on T0. But when people email me, they'll send them, all the documents, and then I have a link which sets up about 15, 20-minute phone call if anyone wants to do one-on-one, has questions. And those phone calls, I have to tell you, especially this round. I did this when people came into some of our newsletters, when we were selling newsletters, and said, hey, you get a 10-minute phone call with me. And I really like the hands-on approach, because the network, man, I'm starting to really get to know a lot of you. And it's remarkable, especially with this round, where people are coming in. I have to say, like 90-95% of people I talk to come in. They ask great questions about everything, about dilution, fundamentals, what are the growth plans for the company, every single question. And it's not a sales call. If you say, well, I don't want to do it, I'm like, okay, right? We're seeing strong demand, well over 2 million. I think we started really officially like in 2 weeks ago. But the people, Daniel, I have to say, one of them helped build data centers for the hyperscalers. Another one works at Oracle. Another one works at AWS, higher up in Amazon's division. Another's a software guy, mathematician, who's into trends and big crypto investor. He's in his 60s. Man, just the people that I'm meeting. Someone owns their own construction company in South Florida. Another one owns his own shipping company in Hong Kong. How important is that, right? We're going to talk about the strike in a little while, just to see what's going on. And getting the inside scoop. Another's an energy trader, one of the biggest sell-side firms. Just people who sold their company, and then their wife will come in and say hi, because they feel like, it's just, the personal experience is great, but just the network is amazing. And when I get off the phone with them, regardless, I'm just like, hey, if you see anything within your industries, I'm not looking for inside information, but they see things first before anyone else. That's what you need, real-time information, because in this market, everything is lagging. You see the data points on jobs always getting revised, but we're seeing lots of things, and that's how I report to you on this podcast. Is what I'm hearing. It's not a bias. It's not like, oh, okay, buy this sector no matter what. I don't care what anyone else thinks. No, it's what I'm hearing out there in the field, and you times that, by the hundreds of thousands of people that listen to podcasts. You times it by, it goes out to over 125 countries, and man, it's the network and the hands-on is really, really cool, and getting to know. Some of these people investing in my company and just subscribers is really amazing. So anyway, if you're still interested in that, guys, it's still open. I'm going to start going, probably going to go to T0, start going to a lot of bigger fish outside our list. But if you're interested, you need to be a accredited investor. It's a $25,000 minimum. Everything is very straight up, straightforward. I'm going to talk about our business, Curzio Research, which is doing very, very well right now. We're growing fast, and I want to accelerate that growth. So if you're interested, frankcurzioresearch.com. If not, no worries. It's perfectly fine. I just want to make sure, because the terms are really good. I came in $100,000 into this round, and I'm a 60% owner already. And people are like, did you do it to check off a box? I said, no, I'd like the dividend. The dividend's really nice, which you're paying annually, and it's a cash dividend. But if you're interested, give me a shout. If not, no worries. But I just want to make sure that everyone has access to that if they want it. because it is a really good deal. It's good terms, and I want everyone to participate in the growth of the company, especially since we're at the very early stages here. If this does work out, right, it's going to result in it could be life-changing for you if I do my job and things go right. Of course, if I walk out, my name's on the door. If I get hit by a tree falls on me, whatever. Of course, there's risks out there, right? I'm going to highlight the risks as well. But, if you're interested, yeah, definitely give me a shout. It's really good terms. If not, no worries. But I just want to make sure everyone has the option to see it. With that said, a lot going on. And yesterday was big news with the debate, right? What'd you think of the debate? I mean, everyone has their comments and everything. It was, I watched the whole thing. I was very entertained.
I didn't catch the whole thing. I was impressed. I thought both of them did very good. I thought, I was talking to my parents, and they were asking me some questions. And listen, this is all very scripted. And I'm not saying, what I'm about to say doesn't mean that it's wrong or bad. So when I say this, I'm not taking a shot at them. I'm just trying to dumb this down to my level here. Politics is much like WWE. It's very scripted. Everybody has their talking points. You want to get across, stick it to the other guy. The difference here is the WWE champion of the world doesn't impact everybody's Florida lives like the president and vice president does, okay? So that's why you ought to pay attention. But quickly, I thought both of them did very well. I think Vance is a better speaker. I thought he handled himself better on the debate scale or stage than Waltz did, but I don't think Waltz did terrible. He had the one bad comment where they were talking about school shootings and guns and stuff, and he says, I've made friends with school shooters. I'm pretty sure he meant victims and things like that. But no offense, if that's your big oh crap moment, or hey, I put my foot in my mouth, which is going to happen. You and I know anytime you speak a lot, just like on these podcasts or wherever, that kind of stuff happens. So I didn't think there was any I didn't listen to the closing statements, so those, I should have done that. But overall, I thought it was very good. I thought each one of them did good. They made their own talking points that they needed to. My big thing is for the consumers and the voters out there, I just hope that they're paying attention from an economical standpoint. So you can always argue facts and figures and say, inflation was 2% or 1.7 or whatever. That's not what I want to talk about. What I think hits people well is what we've seen post-COVID and the injection of money and stuff is, I hope when people listen to policies, whether on Trump and Vance or Harrison Waltz, I hope you understand by now what those impacts would be. So when they talk about putting $25,000 into everybody's pockets, and Waltz tried to walk that back and say, well, it's not the down payment, we get it back in interest and all that. The point is that COVID should have taught you, hey, when you give money directly to a segment or a group of people for a certain thing, in COVID's case, everybody for everything, you're going to have inflation. So if you think housing prices are going to go down because you encourage more people to buy housing with less money out of their own pocket, I just agree to disagree. And I thought that there were some fundamental takeaways for people to at least think about, like, hey, all right, forget if you're listening to Vance or Waltz, don't take them at face value, but like what they said, I'm hoping on the economy, and people are thinking, hey, prices are high across the board. Will that actually work? Because COVID taught us a lot about what will and won't work. And I think there was a lot to take away there, but I thought overall both of them did fine. Frank, what about you?
What I really respected is it went back to old school politics where you had two people that had difference of opinion. They didn't hate each other. And afterwards, they shook hands and actually introduced their wives to each other. And that's the way politics always used to be. It was never this, I hate your guts if you don't agree with me shit, what it is right now, which is horrible. And when I see the debate, I hate the fact, I thought the moderators were terrible again. I think CBS, in terms of fact checking, I love the fact that Vance actually came back about it, Springfield and calling out, and they were like, made it a point to say, well, there's no, he was talking about the illegal immigrants there, and said, well, not all of them, but yet they provide a very easy policy and visas in order for him to get visas. And he called them out, and they actually muted him when he was talking about it. So you had someone fact check them. No one really fact checked on the other side. Again, it would be nice if the Democrats went on a platform that was non-biased. I don't know if they'll ever do that, which really sucks. And I hate that part of it because you saw it, but I thought Vance did a fantastic job. I think he won the debate. That Waltz did very well. I didn't think he did terrible. He was nervous at the beginning, but I found it as Waltz isn't a guy that you could hate. I don't think Vance is a guy that you would hate after you walk away there. And I see that differently with the people that they're representing who are running for president, where, I think Vance did a great job of what Trump didn't do to really explain that we have two track records here. And when I see the bias of what they're asking, it pisses me off because there's topics that, and it's a list that everyone knows on both Democrats and Republicans of the biggest concerns and what we care about. Okay, right now the biggest things are the economy, it's immigration. It's not really climate change. That's low down the list. That's like the 10th ranked. But when you're asking a question about building new homes for people, childcare expenses, no one gives a shit about that right now. Okay, yes, they're concerns. I'm not downplaying that. But you know what? It would have been really, really nice if you asked about the deficits, which I think is a really big fucking deal.
Can't do that.
Or how about ask about Ukraine? How much money is going to go to Ukraine before you say enough? Because it's like this black hole that we just keep spending and spending and spending. You got Zelensky's in Pennsylvania lobbying for the Democrats. And he said, we're so happy to sign a deal with Pennsylvania. What are you fucking talking about? How is that allowed? I mean, you signed a deal with the United States of America, not with Pennsylvania. That's a battleground state. Why are you there? You know, we know why you're there. So when I see this, it really pisses me off. I just wish that they had a platform that was non-biased, that asked real questions. I like the fact that they really got into policy. You can see the difference between both of them. And again, I thought it was a good debate. Both of them respected each other, which is nice. And that's the way it used to be. It used to be like that in all politics. When I remember, who was it? Not Bernanke, but who was the old school Fed chairman? Greenspan used to say, you know, your dad, when they used to that's when it really started. They started going after him, the politicians grandstanding. He's like, you know, I remember your father used to be nicer to me, but he was on 60 Minutes and saying, you know what, we would yell at each other and afterwards we go to the bar and have a drink. He's like, now these people really hate each other. And you see that where they're trying to influence that hate on everybody else. And it sucks. I love the fact one of the biggest things that influences me, and this is why I'm a registered, Republican, which is, I would never tell anyone who's a Democrat not to vote or try to change your mind or whatever. But I thought, we really saw something that we've never seen in terms of, in our country's history, suppression. And even during COVID, I was reporting with not trying to gain subscribers, but I had very, very important information before Johns Hopkins was even reporting their stuff, right? Before they put on all the statistics and everything. And just from interviewing people on lockdown, and leading doctors were listening to this podcast. I mean, our numbers went up tremendously for our podcast. Everyone was listening because we had access to data that I felt like it wasn't being brought public. And then all of a sudden, a lot of the doctors are telling me, you know what, you can't use my name, don't say anything. I'm like, I want to source you. I don't want to be like, I'm this genius. And they're like, I'm going to get fired. I'm like, what the fuck are you talking about? And then I saw when my podcast, which this is on YouTube, it got suppressed. And I'm like, I'm trying to help people where I have kids, and save lives and saying, hey, don't worry about your kids. You don't have to worry as much of COVID. It doesn't impact them. When you had some states, they were wearing masks for a long time and things like that. But that's what really pissed me off in terms of, wow, how you, even if you have a different opinion, that's freedom of speech, right? That's the point. I mean, they have the right to burn an American flag. They have the right to say F you in your face or whatever. That's what free speech is. And to suppress that because you think it's misinformation when it turns out a lot of that was not misinformation, especially on COVID. That is a very, very big deal to me. And in terms of tax dollars as well, I don't think, and I'm going to be honest with you. I mean, Dana, you see it, right? Definitely more than anyone except for my wife and my kids. I work my fucking ass off because I love what I do. Okay. And I've done well in my life, but I've done it because I really worked very, very fucking hard. And when people want to take more of my tax dollars and because I'm working hard and give it to people who aren't working as hard, that pisses me off. Now, what about tax dollars that go to other things? I'm fine with that. But you're taking our tax dollars and you're paying off student loans for people going to fucking Harvard. You're taking my dollars, taxpayer dollars, and you're giving it to Ukraine in this black hole into a war that they can never, ever win. And they're misplacing the money and said, oh, we don't know where this $3 billion went or this $4 billion went. Or, that's when I have my biggest differences. There's some people that, may have been involved, like Walt said, with his son, right? And J.D. Vance was like, I'm sorry, I didn't know that about your son. Like he was witnessing.
Yeah, witnesses shooting.
Shooting and stuff. So, you're probably against guns and you have, most Republicans pro, guns, and it's not the biggest issue for me. I know it's a big issue for you growing up in Montana and stuff like that. And being, I mean, seriously, guys, Daniel's awesome. Shooting.
Redneck in Ohio and then Montana.
Oh my God. I mean, for me, when I first got a gun here, again, I lived in New York and I was shooting. I was all over the place. He just takes like bang, 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 bang. I mean, I was like, whoa. I was like, I'm never going to yell at him or say anything.
The best thing was we were dressed, we went golfing afterwards. So we were golfers in there and everybody's kind of looking at us and then we lit it up and they were like, oh, okay. Yeah. You don't have to wear camo to be able to hit that target.
So if that happened to you in a school shooting, obviously, you might vote Democrat and that's fine. You have the right to do that. It's just that the suppression thing is really bad. And that's what bothered me the most. But I thought Walt held his ground. He was a little nervous at the beginning. He did well, but it was so much of a better debate than what we saw from, the leading candidates, right? So for Trump
absolutely.
and Harris, and they really went into policy. They really talked about, you have 2 records here. This is what you have to look at, and I thought they did a very, very good job. I just wish it wasn't biased, and you really ask questions that matter to most Americans that they want to know about. Really, they want to know about this stuff, and they don't going into other topics, and it was just. But anyway, I thought it was entertaining. I thought it was good. I thought those guys did good. And I think both sides could basically say, okay, hey, you know what? They have plenty of things to say. We did pretty well on. The one negative I would say with Walsh is when they brought up the China thing and he was in China, and he really fumbled that. Like he didn't know, I'm a knucklehead type thing was bad. And I thought J.D. Vance, which there's one thing that you never do, which is sacred, is you never lie about your military record. And that's something that he has done. And a lot of people call him out in that. And J.D. Vance didn't bring that up. But that's obviously the negative point of that I saw, which was a real negative. But overall, I think he finished strong. You saw his points and things like that. But he came across as likable and not this asshole doesn't care and just flip-flopping or whatever. But I thought the debate was pretty good. I thought it was entertaining. Definitely better than the Trump-Harris debate, definitely.
Yeah, absolutely. And one thing on the deficits, I do give credit. The moderators did ask, I forget which question it was, but it was about, hey, how are you going to do all this and not blow out the deficit? So the moderators, and they had a lot of loaded questions. They would ask a question and they would give a ton of facts or say something like this. In the Middle East, well, the administration has, built up troops and done everything they can to really blah, blah, blah. But on the deficit side, and both Vance and Walsh dodged it, neither one of them answered it directly to say, hey, here's what we're going to do and here's how we're going to pay for it. But I wish the moderators at that time would have said, if they're going to give a lot of detail or info on other questions, on the deficits they should have. They should have said, hey, both Trump and Biden and Harris have huge deficits that we've never seen back to back to back years. What are you going to do to cut that? And the only reason I bring that up, and again, both of them dodged it. I'm not taking either side. They both botched that in my opinion. Why I'm bringing that up and telling you to the listeners here is because that is not going to change. Deficits are not going to change. And why do we keep pounding the table on this? Because that is a massive tailwind for higher asset prices. Right, wrong, or indifferent, when you have this kind of spending going on, it's going to be very hard to have equity prices, housing prices collapse. I'm not saying we can't see a hard landing or whatever. It's not all systems go. But just like David Tepper said, when you're fighting the Fed, you're not going to win a long or several round fighting that kind of spending. So just keep that in mind. I wish, to your point, I wish they would ask more about the deficits and such like that. They did ask one question. It was pathetic the way it was worded. Both dodged it. But just remember, as an investor, that's a tailwind. It's silly. It's not right in my opinion, but that doesn't matter. It's positive for higher equity prices.
And we'll get more into that because we're going to talk about China too as well. I thought Kyle Biss had a great interview on Squawk Box. I think it was on Monday, but I want to get to the strike.
That's right.
Which is pretty big, right? I mean, this is impacting a lot, and this isn't just a game. It's not, it looks like it could last a little bit longer, where we have the International Longshoremen's Association, ILA. It is going to impact companies. You're seeing that in terms of retailers. This is a very, very big deal. I mean, when you're looking at, we're talking about 47,000 active workers. They operate 14 of the busiest ports around the country, everywhere. New York, Texas, Georgia, responsible for 1/3 of exports. There's estimates anywhere from, $1 billion to $4 billion a day being lost. I don't know what that is, but I know right now there's over 100,000 containers in New York alone that are in limbo waiting to be unloaded. No one's doing anything. And right now we have a guy, which is Howard Taggart, that's pretty vocal, saying, exactly what's on his mind. And you're seeing that light up on the internet where people are really, really pissed off. I really get both sides of this, but I want to get your opinion first.
My opinion first is I understand that you are pro-union. This Harold Daggett, it's Harold, right?
Harold Daggett.
Harold Daggett, Jr., I believe, because But I understand his tough talk and saying, listen, I represent this group of people. I question on how he's doing it because I understand you're not trying to, this is not like the election. So he's not trying to get the votes of the average guy. So I'm kind of wrong in thinking, wow, I wonder how they think or are perceived by the average worker. Because I was looking across Fox News, CBS, Politico, and Newsweek. And you got to take this with some grain of salt, and then even freight waves, because the ILA will come out and say, listen, container ship prices have gone bonkers in just the last month or so, and now they went from 6,000 to 8,000, 24,000, now 30,000 over just the last few weeks. And then you have Freight Waves, who I check often, and they said, well, according to Azenta, Xeneta. That's way over exaggerated. Prices are nowhere near that high. So take all that with a grain of salt. But what I'm shocked about is the language that he's using, because he's saying he's going to cripple the economy. He's on every, and listen, I give the guy credit for preaching his book and standing up, but he is saying how cars aren't going to come in, clothes, food, all these different types of things. And in one interview, he lays it out. Listen, construction workers, car salesmen, they're all going to start losing their job. You know, we're going to show you who we are. And it's this us versus everybody mentality. I don't think that's right, because when you look at some stats, and then of course everybody's going to look at this, do you have any idea what it's reported that this gentleman Daggett makes?
He makes a lot of money.
I've seen reports of 700,000 plus.
Yeah, he makes a lot of money.
And what they're asking for, Frank, you're a business owner, if I come to you and say, hey man, I'm demanding, I want 50% or again, you got to take all this with a grain of salt. He turned down 50% raises. They want 77% raises, which basically is $5 across the board for every 6 years, consecutive years. But that's not the kicker. The kicker is, hey Frank, I don't want you to ever use technology to hurt my job. I understand you wanting to protect your workers, but man, you're going to piss off everybody that's not on your team. And I don't think that that's the best way to handle this.
Yes. I mean, they're making $20, $39 and they want to boost pay by over 60%, I think, over a certain amount of years, triple company contributions to retirement, improve healthcare. I mean, just a few of the concessions. And I mean, it's a little crazy. So when I listen to this guy, there's a lot of comments saying, you know, what an asshole he is, and this. And by the way, I hate unions. Just, you know, I'm not a union fan.
Oh boy.
So you know, I'm not. I really not. I just, you know, because I believe in competition in the workforce. I mean, I always say this. I don't give a shit what school you went to. You just find me someone's going to work hard, and I could teach you everything about my business. And Daniel, you're a good representative of that, where you came in.
Because I went to a school nobody knows about.
Oh, I wasn't even talking about the school.
As a positive.
Yeah, I wasn't even mentioning the school. I just, you know, it was out of 50 people a day I got the job here, and literally 50. Then we narrowed it down to like 4 or 5, and interviewed those 4 or 5 people, and we hired Daniel. And you know, I could teach you anything if you work hard. I can't teach you how to work hard. And I just feel like sometimes when you're in these groups, it doesn't matter. I mean, look at it, even, you know, not comparing it, but the post office with city jobs. I mean, you know, you don't really have to do your job and you're probably going to get paid where, you know, I love the competition. I love working hard and, you know, getting further based on how hard you work and things like that. But, you know, what they're doing, and people were just like talking about the technology and everything, you have to understand where this guy's coming from. I mean, it's very predictable, right? And he's you know, I don't know how old, I'm pretty sure he's like well over 60, 65, because he's been in the industry for 50 years. So, you know, he's fighting for his job. He doesn't really care about what anyone else thinks. And I respect that. Yeah. Okay. It's not that I agree with it. I'm not saying I agree with it. I like it. Even when Michael Saylor goes all in on Bitcoin, like you could hate the guy, but that guy's if Bitcoin crashes, you know, the guy's going to get wrecked. He's going to lose billions, right? So Bernie Sanders, I always said I respected him, even though, you know, he's like, socialism is the way to go. He truly believes that. He's not just saying it where, okay, I respect it. That's your opinion. I totally disagree with you. I think it's a disaster if our country ever went that route. But, you know, this guy is talking to, you know, is representing his audience. And he's worried, very, very fucking worried, because if you look, and I post this video on Frank Curzio, it's for, I was going to say it was Twitter. It's on Twitter. I posted it, but it was a TikTok video, right, which is X, but it was a TikTok video. And some guy is like filming the automation that's going on there. And the automation, the robotics, and combined with AI, this is the industries that I follow, that I see. We have this company like this in our portfolio that does logistics and things like that in our AI portfolio newsletter. So I'm very familiar, and they should be scared shit, just like Hollywood was scared shit, which is why they went on strike and said, we need to get this taken care of. So I get why he's doing it. With that said, you know, it is hurting the economy. Hopefully, you know, they're going to give him a good enough wage, but it's not about everyone else and the whole world get pissed about him. That's not what he's focused on. He's focused on his 45,000 guys and saying, let's get them a raise because we're going to be in big fucking trouble pretty soon. That's an industry that's really, really going to get impacted by robotics, by AI, and, you know, I see why he's doing it. That's all I'm saying. And he's very aggressive. It's almost like this guy's in a mob saying, I don't care about the economy. I know how people see it. I'm not agreeing with it. I'm just saying I like predictability. I never have problems with people where you can predict them. That's the way they act. They could be an asshole. They could be really cool, but you know exactly what you're getting. You always know what you're going to get from that guy. And I just respect that part. Do I agree with it? Not necessarily the way he's talking to people, but it does provide an opportunity. Because what did he say about the White House? What did he say?
So you have the Taft-Hartley Act, which is where the president, and Bush did this at one time to avoid this, I believe, which is essentially you say you have to go back to work and then there's a 90-day period and stuff. They're already out in front of that saying the White House should stay the F out. They actually put that in a press release from the Teamsters. I was hoping that was fake news. That kind of shocked me. But again, to your point, you have to come out there, you have to hit hard and be bold. I respect that as well. A couple other things he said, Frank, that took me by surprise. After midnight when the strike officially started, he was out there and he says, we're going to show these greedy bastards you can't survive without us. Mm-hmm. Again, that's a good rallying cry. But when you're out there touting that about half the world depends on them, and like I said, I just wonder about that approach. But again, he's not running for office. He doesn't have to get over middle America.
And he's made so much money, and he's
for his guys. Absolutely,
he's going to be able to retire, pension. He's fine. So being that aggressive makes sense, and the timing makes sense too, because you have 45,000 workers, and you have two candidates where you have battleground states and things like that. And I don't know, to say it now and try and say, oh, well, I don't care about the White House or whatever, but I'm sure, just like what both candidates did with crypto, there's an opportunity there to really, be in the media a lot, to do the right thing, to say, hey, this is what we're doing with workers. But you have to be careful, because what you're going to give them is going to result in, you talk about inflation and wage inflation. I mean, you are giving them, in a place where we want to see inflation come down, this could set precedent for a lot of other unions to strike when their contracts are up, because, what you're giving them is a significant raise. It is interesting to see how both parties would handle it, or just sit back and not worry about it. But when you look at 45, I think there's 80,000 plus members altogether, 45,000 active, I think, right? That's what I'm reading. Again, I want to make sure.
Well, and the East Coast is completely different than the West Coast, because they already signed a deal a little
crazy.
bit.
But the economic impact, listen, it is going to impact certain stocks. We've seen that before. In terms of supply chains, when there's companies that do great, the autos did horrible. They didn't lock in with suppliers. They didn't lock in with Taiwan Semi and lock in, space, which the technology companies operate their business models totally differently. They saw it and they locked in a lot of the, in terms of, that capacity of how much capacity they can lock in from their suppliers and lock it in and pay a little bit more well ahead before the autos saw it. That's why if you ordered during COVID, it took, 6 months, 9 months, you couldn't get anything. I mean, it was so bad that your vehicle, think about it. Your vehicle basically was a 2020 and you're looking in mid-October, right? And then that's when the 2021 vehicles come out, and you're saying, okay, you have to book 8 months in advance for 2020. The new models are coming out for 2021. It was a difficult situation for the auto companies. Again, they were caught off guard. You're going to see companies caught off guard, and they're going to be talking about it in this quarter when they report in a few weeks. And I know Abercrombie talked about it. You saw that stock get hit. I think Gap got hit a little bit. You're seeing companies that, you're going to see an impact of delays. And a lot of times this is something that is temporary. Maybe. It depends how long it goes, because we're talking about the holiday season. Prime Day, I think, is coming in a few weeks, right? So this is going to impact that, where that's a lot of money they generate, and then that's over. So if you're looking at certain periods, like the back to school period, which was a couple months ago, right? So, when you see that and you miss that period, that's different in terms of inventory levels and stuff. But if this gets solved in the next week or two, it could be a buying opportunity for all these companies. I don't think it's going to impact demand too much. It's like more like, how we always push forward or pushed up demand, right?
Yep.
And push forward. That's what it's really going to be. So you're going to probably see companies say, hey, we're warning, but maintain their annual guidance, and they're probably going to make it up on the other end. And if you see the stocks, go up or down based on that, it could mean it's going to create a good buying opportunity if some of these stocks get hit, if they're able to solve this quicker. Something to definitely look at, especially within retailers, because you're seeing reactions in retailers.
As you should, yeah.
As you should, yeah.
And quickly, I'll give you a couple here. So Academy Sports, ASO, Frank, is the ticker. Academy Sports and Outdoors. So they and they and Dollar Tree, which Dollar Tree we've talked about in the past has gotten absolutely annihilated. Mm-hmm. Goldman's put out some good reports. They basically have a lot of reliance or impact from the East Coast ports, okay? So you want to pay attention to that, see who's affected by that. And then on the other side, you look at Targets and Costco's. They're both out saying, hey, we get the most imports from the West Coast. Not that they're not going to have any impacts at all from the East Coast, but that's how you want to look at that. So, ASO and Dollar Tree are more impacted by East And there's several more. Maybe we'll get into those tomorrow on Wall Street.
You see like a
Unplugged
10%
Premium.
impact for some of these companies when you look at 5 days.
And that's huge.
There was 60, and this is leading up what people were worried about it, and it was trading at around $60. And then you see, right before the strike and thought it was going to happen, it starts coming down. So you're going to see companies, again, 10% decline. If this comes back online, it's probably going to be, a good buying opportunity for a company like this.
And quickly, I know we have 2 holidays or events before Christmas, but this is my Christmas wish list, because the conversation that could be happening around what's going on is a huge missed opportunity, in my opinion. So the unions are on strike because wages aren't keeping up with the cost of living. But we're not talking about what causes the high cost of living and inflation. We're just talking about the it's these greedy bastards versus the working man and all that. That's the frustrating thing to me, because we could and we do have a great opportunity right now to say, hey, okay, why are you so pissed off as a union worker? The average union worker, according to different reports, makes about $81,000. That's minimum. A lot of these guys, like everybody else, no offense to them, a lot of people work overtime. Okay, a lot of people work a hell of a lot more than 40 hours a week, and that's fine. But then if you pick up extra shifts, a third of these ILA workers make $200,000 a year. Now, that's all relative. You make $200,000 in Miami, that's different than the Midwest or different in New York.
Yeah,
like you joked about. You make $150,000 in New York or $250,000, you're not living large.
You're not. You're middle to low.
And I'll be honest, because I've never been there. At first, I think, well, that sounds nuts. That's a ton of money. But when a freaking parking spot, if you have one, costs I don't know how many thousands of dollars a year that you can't even really use, you start thinking, oh, okay, well, maybe that's crazy.
Yeah, just
so again, that is aggravating that we're not talking about the cost of living, why that is. The deficits and silly spending. But anyway, we'll help you navigate that. There will be some opportunities through stocks, but we'll get into more of that tomorrow possibly.
Also,
but I
tax,
just thought that was good on that.
And tax code's a big deal. I mean, when you're taking 55% of everything, when you're living in New York City or San Francisco, it's a big deal compared to Florida. Right? I mean, you're almost getting a 20% bump, moving to Florida. So the cost of living, really, it sounds like if you're listening to this in the Midwest, you're like, really, $250,000? I'm telling you, man, it's not a lot of money.
Yeah, because
a lot of my friends,
much
both of them work. They pick up their kids from school, and they barely get dinner on the table because they're so busy, but their lives are stressful. It's crazy. It's a matter of where you're living sometimes, but. Getting into, I wanted to turn the page and talk about the markets. Stocks have been pulling back past few days to start the new quarter. Oil finally starting to rally, where you're seeing, unfortunately, as Middle East, right? Tensions are heating up. It's getting a little crazy. I don't think it's ever a good time when you're seeing, especially watching CNBC, when you're seeing missiles, right, going back and forth, Israel and Iran and things like that. But overall, when you're looking at the markets and how we ended the quarter, you're seeing this rally broaden out, and it's a lot of stocks that are doing well. Not everything. I mean, I've found a bunch of stocks. If you're looking at it from last quarter alone, if you're looking at Moderna, Supermicro, Dexcom, DG, different industries there, they're down around 40% for the quarter. So it's not like you could just close your eyes and buy. Like we said, it's definitely a stock picker's market. We'll go into lots of ideas tomorrow on some of these topics, in our Wall Street Unplugged Premium podcast. But I will say this is important to note. Is with October. October is usually the end of the month. It's the end of the month of the fiscal year for most large mutual funds. I think it's like 30% of them, largest mutual funds. Meaning that's when they're going to adjust for tax losses. So maybe they're going to be selling losers, rebalancing to the winners, and they call that window dressing. This way, when you send out, everything, it shows that, hey, I owned NVIDIA, and I own this, and I own that, and all this stuff. But you could see, like, towards October, which is not a good month, we see a lot of crashes happen. So you're going to see that all over social media. Market's going to crash and shit like that. I think, I don't know where the market's going to go. I just think it's a dangerous game. We know the risks. We highlight all of them. Daniel and I highlight all of them, right? We're very aware about risks, rewards, stuff like that. But it's very difficult to short a market where interest rates are going to go lower and earnings are still going higher for the average S&P 500 company. It's very difficult to short a market like that. But when it comes to October, you could see a lot of the underperformers go even lower because they're going to sell them and take tax losses on them. And maybe you'll see some of the ones that have gone higher, push more money into them. And that's a trading opportunity, just to let you know. Sometimes. We're not traders here, just one of our portfolio. We do trade. But just to know that, that happens a lot, and it happens even with your portfolios. You're going to sell a loser that's down, especially if you have a big winner, right? That's this way, okay, I just sold a big winner early in the year, and now I'm sitting on this stock. I like it long term, but okay, let me sell it for tax purposes and buy it back, whatever, 30, 45, 2 months later. You're going to see that a lot with mutual funds, so you could see a lot of volatility, just something if you're a trader. And I wanted to get into Nike because Nike was a fucking disaster. Holy cow. I lost a few $1,000s. Last quarter, I said Nike's the best at manipulating earnings, and they did a good job manipulating earnings, but the stock actually went down. Went up first, and I said, let me buy some calls. I lost a few $1,000s. Listen, what I tell you to do, I do myself a lot of times. So, I lost a few $1,000s on that. I didn't make money because stock went up and then crashed. Nike was a disaster. And I posted this on Twitter and reviewed the quarter. And this was right before, it was about 5:15 yesterday PM, before their call, and they came out that we're suspending our guidance.
Brilliant.
Which, holy shit. And then right after that, the stock was down 2%. And right after I posted, not that it was a big deal, and I'm just saying, literally 10 minutes later, the stock was down 7-8%, which is down 7-8% now. I don't know if you saw Nike. Did you see it?
I didn't. I was grinning ear to ear. I read the bullet points, and I knew that you'd want to talk about this. But I have to say, if I'm the new CEO, this is exactly what I would have said to do. Suspend it, get ready for the kitchen sink quarter if you want. But I just thought this was good politics on the business side. I'm not saying it was a smart move or if they're being shady. I'm simply saying when I saw that, I thought, wow, the new CEO is going to be like, yes, give me the easiest runway to where I can set it up for future success. But
see, I disagree. You're the new CEO.
But if you're the CEO, wouldn't you want that? I'm just saying, I would want that runway.
The CEO lost a lot of credibility yesterday. First of all, he didn't get on the fucking call, right? He didn't get on the call. Okay. And I know you're the new incoming CEO, but it's nice to be like, hey, this is the plan. You have excitement. You're getting on there. You have the opportunity to jump in front of everyone. To me, that was a real negative of, oh, okay, well, let's just, suspend. You didn't have to suspend guidance. Most people expect you to bring down guidance. Bring down guidance and make it super conservative. But when you suspend it,
lower the bar, yeah.
The analysts hate your guts because their job is to basically get their model right. And now they have no clue what's going on. They have absolutely no clue. So when you remove guidance of a company that always reports guidance, it forces all of these guys to basically say, hey, you know what? We have to cut our projections dramatically. We have to downgrade the stock because they're operating in the dark. Okay, and that's their job. Their job is to provide that great advice based on the information, and they usually have access to their CFOs and know what's going on, again, with their models to come up with their target price. You basically, everyone that follows you has a buy rating on the stock you just gave the finger to, and those are your allies. Okay, now, when I look at Nike, this isn't a company that's doing bad because of the economy. This is much, 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 much bigger than that. Nike's in a lot of trouble. It's a lot of trouble. I think Nike right now is uninvestable.
Ooh.
Uninvestable to the point where it should be trading a lot lower. This is not a cheap stock. This is still, with today's move, it's still trading at 25, 27 times forward earnings. Why the hell would you buy Nike right now? And I'm going to throw some numbers out you. Okay, when you look at Nike across their divisions and how terrible they did, I mean, this is every single one of their divisions across the board were negative. If you're looking at China, you're looking at Nike Direct, all of them negative. All the way. North American sales were down double digits. So, the report said, okay, we beat earnings again. They're great at manipulating earnings. They're seeing earnings and sales continue to decline year over year, and they're trading at a premium multiple, which makes 0 sense. I told you, 25, 26 times, the average S&P company trades around 21 times, 21 and a half times. You deserve the premium if you're growing tremendously. That's fine. You're not an expensive stock if you trade at 40 if you're growing earnings by 20%. This is a company that's not even growing earnings and sales, and you're trading at a massive premium. Why the hell would you own this instead of Meta that's trading at a cheaper multiple that's growing across all of its divisions? That's in AI. It's in, now you've seen a metaverse start ramping up again. They're in every single major trend. With Nike, you are looking at a company that's losing market share. And it's not because, the economy, people don't want to pay sneakers. They're paying for sneakers. They're paying for Brooks. They're paying for Hoka. They're paying for Asics. They're paying for On. I just bought 2 pairs of sneakers. I didn't even go near the Nikes. Okay, if basketball, yes, you're still okay with basketball, but running, they're losing market share tremendously. And it's not like people are undercutting them with price. These are just better sneakers. I'm wearing them right now, which are awesome. I mean, these are better sneakers. I mean, here. These are On sneakers, or these are Hoka
Look at
sneakers,
this, people. Were you expecting Frank
These are
to
great.
shoot off?
You're seeing more comfortable. I just bought these. I bought 2 pairs of these, okay? And it was amazing. And usually I'm buying Nikes. I wear Nikes all the time. I didn't even plan to do that. I'm just saying that it's when you're looking at a company where your clothes aren't selling, your sneakers aren't selling, you used to have this competitive advantage. and this moat where people are like, okay, Nike beats everyone, that's gone. What the CEO is looking to do here, you have to change the culture. You have to change everything around Nike. It's going to take a very, very, very long time. 27 times forward earnings. I mean, Apple, you're talking about a company like Apple and Meta trading the same multiples, but yet they're in AI. They have huge balance sheets, not seeing negative returns. Also, which we'll get into as well, is China. So China's back. China's not back for Nike, right? You're going to see that with companies. That's where you see if China's real and it's not just this BS, and we can get into that right now. But with Nike, be very, very careful. It's a company I followed for a very, very long time. Everyone says, whoever goes up against Nike eventually kicks your ass. Those days are over. There's something structural. The foundation is cracked with Nike. This isn't economic. No, there's companies that are doing good, that are selling sneakers. There's consumers that are spending. They are not targeting them. They're not making money off them. And right now, it's a total disaster there. And for the CEO not to get on the call and just introduce himself and say, hey, this is what we're doing. We know things are terrible, but here's the plan, and this is what we're doing, and we're getting on. I'm working my ass off. You had the opportunity to do that, and what did you do? You removed guidance. You actually had, what is it, the annual conference or whatever day they call it, right? They canceled that.
Investor Day
or whatever it was. They canceled that as well. I mean, it's a total disaster. I don't know why anyone invests. People are like looking to bottom fish here. It's a very expensive stock here. I think you're crazy. There's so many better names that I would invest in compared to this one.
The last thing on Nike that cracked me up is because, I liked your structural problems here within the company. They're bringing back Elliott Hill, who is a veteran. So it's not like they're grabbing a new CEO or whatever, which even was more surprising to me and made me laugh out loud about this pulling guidance and all that. It's not like you just grabbed a new Joe off the street or a new, same industry guy. You didn't steal anybody from a competitor. You brought back Elliott Hill, a big-time veteran. So anyway, let's get on to China, because I know
China.
You want to talk about that.
Say jumps to the China virus.
China.
China
is on fire, by the way.
On fire, right? You're seeing stocks up, I think, 25% in the past couple of weeks.
Well, the Shanghai Composite, the entire market is up 18% over the last month. Most of that is just over the last 2 weeks.
Yeah.
Go ahead.
Listen, when it comes to China, as a trader, momentum, you don't want to jump in front of a moving train. So you're probably going to see it go higher. But I want to bring out a couple of statistics here that are interesting. Because, everyone's talking about this bazooka stimulus. And China's been trying to stimulate their economy for well over 2 years with similar measures, right? So what they did, they lowered short-term rates. They also said, okay, we're going to provide special, lowering borrowing rates for consumers. A lot of the consumers there, you don't see a high debt to GDP in China. That's because a lot of people who have money, they have it tied up in their real estate, but real estate's getting annihilated. You're seeing real estate come back just off this rally, again, a little bit. They're lowering the reserve requirement ratio for banks. Everyone's cheering that. But when we put in perspective, these are the measures they've been doing for the last 2-3 years. So when you look at the reserve requirement ratio, it was 17, basically the amount of capital you keep, right? And you keep on this. It's like a cushion for banks, right? It was 17 in 2018, and it was 10 before this. Now it's 9. Okay, you last lowered it in February.
Which is huge.
Well,
that's a big move.
It's a big move, but it's done nothing up to the point only because you're saying, well, this is a bazooka stimulus and now it's time to invest, right? This is what Tep is saying. Again, this is the bank's cushion that they have if things go into the shitter, right? So basically money on hand to withstand dire economic conditions. You have dire economic conditions. They're dire. Holy shit. I mean, when you're looking at China, they have a debt crisis, they have a real estate crisis. China banks, they say, have $500 billion in non-performing loans. That's what they report. Most economists say it's past $1 trillion non-performing. So this isn't $1 trillion in debt. This is $1 trillion in loans that are not being paid back, right? This is about 6 to 7 times more than you'd see at the U.S. And it's not, it's massive. And that, again, economy is a little bit smaller than ours. But we've always said this, at least I've said it, that deficits don't matter. And I know people are like, Frank, you're out of your mind. I'm just telling you. I'm telling you the truth. I'm not lying to you. Listen, I've heard these stories from the 80s. Yes, that's how old I am. Of, oh my God, the dollar's going to lose reserve currency status. Holy shit, you got to worry about gold's going to go through the roof. And it doesn't matter. The deficits don't matter. What matters is if you're paying that debt. Okay, and we're paying the debt, right? So if you're paying the debt, it doesn't matter. That's why AT&T, so many people said AT&T is going out of business. They never talked about the $30 billion in free cash flow that they generate every year. recurring revenue, almost guaranteed from the contracts they signed throughout whatever, cable and phones and stuff like that. And everyone was like, they have like $150, $200 billion in debt. They're what was it? Their debt to capital ratio, I think, was 2.3, 2.4. And they say if it's over 3 or 4, it's higher. So when you're only looking at one side, right? If you're saying, how much debt is there? When you're looking at deficits, they don't matter. What matters is when they're not getting paid. And in China, that's why it matters, because you're seeing a lot of companies, you're seeing people laying off employees, they're giving IOUs, talking about some of the biggest companies around in China, again, following this story. So when you're looking at last stimulus, Daniel, this was in July, they cut lending rates, they injected cash through a reverse repo. This is in July, and none of that worked to stimulate the economy. But all of a sudden, this works. And you're injecting $300 billion into a $20 trillion economy this time around. I don't know if you're a numbers guy. That's 1.5% of GDP. So I don't know how much follow through we could see from this. It's nice. I see more of like this dead cat bounce, which we saw 2 big major moves in 2008, which people forget, of stocks going up 20%. And then towards the end of the year, they went up before they crashed one final time in 2009 when the market crashed from January and hit the lows in like the first week, second week in March. Now, when I'm looking at how much money is being injected, I want to put this in perspective as well. So the U.S. was injecting money into their economy. And if you look at in 2020, fine, nobody knew what was going on. You injected the money with COVID, and I get it. But then you injected $4.5 trillion, $4 trillion more into the economy when assets at the end of 2020, everything was at all-time highs. It turned out to be $9 trillion. You know how much that is? That's 55% of GDP. That's why economists were like, inflation is going to be transitory. Fuck that. Are you out of your mind? Like, just forget about everything you learned historically. You're handing this money directly to people. It's not going to the banks who decide like it was 2008, 2009. You were going to see massive inflation. You were wrong. I felt like we were dead right on that. 55% of GDP, you're looking at China injecting 1.5% of GDP. And these stocks are going up tremendously. Now, you had Kyle Bass come on TV yesterday, which I thought was fantastic. I thought it was a great interview. He talked about risk reward, basically. So he said GDP for China is up 500% in 15 years, and yet their stock market is, even after this move, is at the same exact levels. It hasn't moved. Now, to put in perspective, U.S. GDP increased 75% over the same time frame. The S&P 500 is up 400% after reinvesting dividends. So from a risk-reward perspective, when you say, this is going to stimulate China growth, it usually doesn't benefit in the stocks because a lot of those numbers, they're full of shit anyway. They don't really report them, right? So what does this mean? If you're looking at a risk-reward, this is a great trading opportunity. If you want to trade it. But when it comes to risk-reward, it's the most important thing and I'd say forget diversification, invest in what you know, invest in good, strong businesses. I am where I am today because of how I invest because of risk reward. Okay. If you have $10,000 to get rid of and you're like, hey, I want to invest in something and the reward is 10x that's a good risk reward. You could lose all your money, but that's a good risk reward. You don't want to risk $10,000 and lose it all and get, 25, 30% returns. Right. So risk reward is all about like, okay, how much am I willing to risk? And that return better be much, much greater. And if I'm investing conservatively, you want to make sure those returns are great. Like right now, I think generating pretty much a 5% return on yields, if you can get that, which you can get in money market account in Interactive Brokers, is a great return, risk reward, because it's, you have real interest rates. When you look at real interest rates and inflation, that's above that rate. So at 5%, that's not a bad return, right? Risk reward, right? You're not risking really anything, right? So, and the reward is pretty great. When you look at the risk reward in China, even when their economy does great, their stocks particularly don't do that well. Now we have ADRs here that trade here that's differently. So you're seeing, stocks could continue to move higher, but just be careful. And what people are talking about this bazooka stimulus, I don't know why they're calling it a bazooka. They've been doing the same shit for 3 years. So it's coming off really, really depressed lows, and I get it and go higher. Not telling you not to buy, but just be careful because this could turn right away, and there's still a lot of stuff going wrong in China that they haven't fixed yet, and I don't see that changing. The way you'll see it changing is when Nike reports, okay, more declines in China. Let's see what Starbucks says about China. Let's see what Yum Brand says about China. Let's see what Levi says about China. These companies have big operations in China. All of them have been warning and saying things are worse, much, much worse from the consumer. The consumer, no matter what kind of deals that you're giving them, their wealth, most of their wealth in China is tied to their real estate, and real estate has been going down tremendously. So sentiment-wise, they're still scared. They still feel like they can't spend no matter what the lending rates are. Just be a little careful. It's different from stocks going up and being driven by fundamentals. It's not being driven by fundamentals. It's being driven by momentum. It could go higher, but just be very, very careful. Again, that's just my 2 cents. I mean, you could have a different opinion, Daniel. I don't know.
No, I don't. I mean, I wish I did for the back and forth on the debate podcast for fun. I'm kidding. I couldn't agree more. I mean, it's a trading opportunity, not an investment. I mean, the shortest, you made some really good points there. I would just highlight that. They're freaking communist. That's why you trade them. I mean, it's just ridiculous. So, yeah, but enjoy the ride if you've been there. But K-Web, we've talked about a lot. Baidu, Tencent Holdings, JD, Baba. All of those are at or very close to 52-week highs. And again, that's because of the last 2 weeks of trading. I mean, they've absolutely exploded. So if you're in it, if you want to buy on a pullback, if you think this is going to continue, great. I do think that the bazooka stimulus, I love those stats about the 1.5% GDP is all they're doing. But I do think the bazooka stimulus is correct. And what you say, it's a sentiment. It's about what people feel or what's going on. And that's important. Money's emotional. Stocks are emotional. But yeah, there's no way in hell this guy would invest over there.
And I want to see what Tepper does here, because Tepper, you talk your book and that's great. And he was talking this a week ago and they're up probably about another 10-15%.
Oh, man.
Since he talked.
Millions, if not billions.
What I want to see is what Tepper's thesis is, and what my thesis would be is, okay, the China stimulus is great. We're already pushing into these stocks. They were in the past 2 quarters when we look at 13Fs. But when you look at that thesis, especially for a lot of hedge funds and how big they are, they're not really looking for doubles in stocks. Sometimes they look for 25, 30, 40% gains.
Especially in 2 weeks.
You got 25% in 2 weeks. I wonder if he's going to back up on those positions. Is he adding more in those positions? Because, you were right and you made money on it.
Yep.
Is 25% the return you're looking for? Is 35% return you're looking for? 40%? Because you're close to that in some of these stocks, getting them in a couple weeks. I'd like to see if he dials back, if he's still keeping them. And if he dials back, it's telling you that, hey, the guy who was right on this and smart on this early on is basically telling you not to buy because he's taking profits here. So pay attention to that, which I like to pay attention to. And again, he's a brilliant guy. He's my favorite hedge fund manager in the world. I don't know if I can claim that he was necessarily right on this yet. He was right, but he's been in these stocks on the way down as well. He's been in them for a while. But I'm curious to see what returns he's looking at, because he's definitely up on these investments. He has to be. I mean, they're up tremendously. But I know he was down a little bit going into this whole massive stimulus announcement by the central bank of China. But let's see what he does. It's going to be very important of companies that are adding and going into China stocks. Again, that's an area of the market where it's even driving materials. It's driving a lot of different sectors. It's driving. That was a negative on oil. Is China really coming back? Let's see with oil. We haven't. Oil declined. It was still declining before we saw missiles on TV being shot back and forth, right? Yeah. Israel. So, we'll take a look there. But I did want to end with this. Saw a lot of deaths this week, of people that is, sports figures.
Yeah. Chris Christopherson, not sports figure, Pete Rose.
Yeah. Pete Rose passed away as well. You look at Dikembe Mutombo.
I didn't hear that. Mutombo passed?
Mutombo passed away, brain cancer, and I love Dikembe, man. He was great.
The finger waving, that's hilarious.
One of the best defensive players and shot blockers that we've ever seen. And I love his personality. I remember him, he was on, what talk show was that? A great night show. I forgot what it was, but he was sucking helium out of a balloon trying to do like
what was
Three
it, like
Stooges.
Back when? So like Leno or Letterman?
It wasn't Leno. It was, who's the guy who has his own show, is still around. What's his name? God. I like him too. The guy with the red hair. Late night.
Conan O'Brien.
Yeah, and if you see that on YouTube and TikTok, whatever you watch, right, it was pretty funny when he sucked the balloon.
No, I didn't hear.
He has such a deep voice, but he was very funny. He was cool. Him and Jordan used to go back and forth. I know Jordan respect him a lot.
Yep.
Just with Pete Rose as well. I mean, maybe it's time for him to get into the Hall of Fame. I mean, come on.
Yeah. Do you think that?
I think they're going to do it. They should do it. They should do it right away. I mean, that's what they were really waiting for, right? But
that's what it sounded like.
And listen, I get it. I get his personality and everything, and I get why. But man, you talk about records that he's set, and records are always broken these days. It seems like with different things, and say that Mets, by the way, nice win, first round of the playoffs. But it's you're moving if you're using different balls, if you're moving in the the walls and stuff like that. I remember the first Mets stadium when the new stadium, which was whatever, how many years old now, 10 years, whatever. But their outfield was really deep and they moved it in, right? So stats are different, it's steroid era and things like that. But man, the stats that he has in terms of hits, games played, it's just it's incredible. I think he should make it. And also, RIP to John Amos. John Amos. So actor, I met him personally when I was younger.
Amos. Why do I know?
He was a guy in Coming to America. father.
Man, I didn't.
And I met him. He was at the Nickelodeon
Nickelodeon
studio when I was in Disney when I was probably about 14, 15 years old. I think Coming America was there, and I was just like, hey, how you doing? He was so nice. He was so cool. He's a great actor. I liked him a lot. So, but yeah, you just see that, and it's one of the things that you suck as you get older. You see a lot of that, and, around you, too, as well. So, but yeah, just seeing a lot of that and with everything else going on with politics and everybody pissed off and angry and stuff, just, remember the good things about these people. It's really, really cool. I mean, Pete Rose, just a great baseball player. It was awesome. Yeah, he made mistakes. Everybody fucking makes mistakes. All right, get over it. Dikembe Mutombo was great. Really great basketball play. Enjoyed him. He was fun. He was cool. Great attitude and everything. So, unfortunately, I just wanted to end the podcast with that. Rest in peace and stuff like that. And just appreciate life, man. You never know. So,
that's right.
Which is
Cheers.
really cool. Enjoy it. Don't get caught up in all craziness and anger and shit like that. That's what everybody else wants you to do. But most people, like we saw yesterday with that debate, I really appreciated that afterwards they shook hands, they introduced each other's wives, they showed compassion, but yet they were competitive. That's the way it used to be in politics. It's not we freaking hate you because we disagree with you. And again, that's the rise that a lot of people want that I don't think any individual outside of politics wants. And it was kind of nice to see that yesterday. So anyway, guys, questions, comments, I'm here. Again, if you're a credit investor, I'm going to start sending that deal out to a lot of bigger fish now. But give me a call if you're interested, frankcurzioresearch.com, and email. Again, I can get on a call with you if you have questions after I send you all the paperwork, everything, financials, everything you need to know about the company. But, really good times and met a lot of great people over the past few weeks, probably 40, 45 investors I spoke to. We have a lot of calls set up too. You get access to my calendar. It's a 15, 20-minute phone call. But it's really cool meeting everybody and talking to everybody one-on-one. Just the people behind it. If you have a brand, if you have a company, do this. Because what you're seeing right now, I didn't want to go here for this, but what you're seeing right now is, especially companies that just have, online operations, right? They have a phone. They don't even have a phone number. You got to email some of these people, right? And when you talk to people, it puts in perspective where, holy shit, man, I better get this right because people are depending on me, where they actually lose their hard-earned money if we get this wrong, Daniel, And I think everyone in our industry should really fucking do this. And I don't think they do, because if they did, they'd change their practices and think about their business a lot differently. And they'd have more loyal subscribers and people to follow them for decades instead of 1 year or 2 years based on some kind of crazy claim that you're making that can never come true just to generate money. So I would say that for all businesses, get to know your clients. It's great. The biggest thing is the network. The network is massive. It helps us out tremendously. It leads to so many ideas because I've been covering all these industries for all my life. And hearing from you guys helps me out to really dial into some companies that are going to benefit. And a lot of times it's companies that they're not even mentioned. They just give me a macro perspective of what's going on in their business. Helps out tremendously. Love to hear from you guys. frankcurzioresearch.com. And just want to say thank you so much for listening. I really appreciate it. Daniel, follow thoughts, anything, email, whatever. What's your email again?
Daniel at curzioresearch.com.
And last thing. I'm going to say this again. You're getting a lot of compliments, Daniel. I don't like that, but you're getting lots of compliments. Everyone's, I love Daniel. All
right, next guy, talk some crap about me to
I know.
Frank.
I get someone that says, you know what, Daniel's a piece of shit. He's terrible.
That's right.
It's horrible. No, but it's really good, and Daniel's been doing a great job. Love him, and really appreciate it. Fixture to this podcast, and you see a lot more of us doing even more segments and podcasts going forward. You're going to see a lot of structural change in our business. Really exciting stuff for our most loyal listeners and followers, which is coming down the line in the next couple of months. So definitely stay tuned. And as always, we'll put back to you soon. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.